May istorya. Good afternoon, everyone. This is Wilmore. Today will be our weekly webinar. Then I'll be talking about logical stop location because this could be a very problematic aspect in trading. Many are struggling where to put their stop losses, although they get the right direction of the market, but they will be wondering why they still lost their open trade. So today I'll be discussing about where is the logical stop location. So, but before I'll be starting, I have to uh, I have to remind everybody that forex trading is a high risk business, and don't indulge in trading if you're not highly trained and if you're not trained psychologically and in market analysis as with risk management. So all of my methods that are being shared here in this webinar are just a mere um, I cannot be held reliable for any of your losses. So before you apply this strategy to your actual account, you have to do back testing first. You have to feel really the rhythm of the market and perfectly doing it well with your back testing. So that's to be successful in trading, it needs really a lot of practice in a lot of back testing. That's our training field, wherein we can master everything in our forex trading. So today, I'll be opening a chart. I'll be sharing it right now for you to see my screen. Just give me one moment. I'll be sharing these charts for you. All right. I hope you can see now my screen. So in having stop lo loss location, you should have like rules where to put your stop losses. Number one, um, you have to put your stop losses where it will invalidate your trading idea. Number two is you have to put your stop loss location where it could hardly be targeted by the big players of the market, like institution, because they're well trained in stop hunting. I'd like to remind everybody that it's not the broker that is hunting your stop losses. It is actually the big players of the market, the banks, institutional traders, hedge fund. They are the one because they are trading with the millions or billions of dollars, and they are trying to reduce their slippage. That's why they will be looking for to stop or to take all the stop losses of the crowd to make money and to reduce their slippage. So number three is you can apply your stop losses with candlestick pattern with a signal bar and with the entry bar, and then with the patterns as well. And you can use like indicators like parabolic, SAR, or fractals, ichimoku, and what else? Comma. You can use that one as well. So this is what I'm going to share to you on how to use those indicators as well, how to place your stop loss with a with pure price action. So the first that we're going to tackle is using the pure price action as our stop loss location. All right, so I will begin. So in this pattern, we can see, in daily, we can see it here that certainly this is a what? A triangle, descending triangle, right? So stop loss location in this perspective is it should be on top of the wick, just like this. You can see in this location, this is a mother candle. Then you can see certainly almost a double top or micro double top, then harami form. So in this location, you can put your stop loss right here. Mark it red. And it is the second point where the market, you know, second points of the touches to the trend line. As well, if we're going to look at the horizontal line, we can say that this is a level as well. That's the zone. So certainly this area will be tested before the market will go down. And as you can see it here, you can see two legs. First leg, then second leg, then retrace. So um, this is what we're going to look is that's why when we're going to put our stop losses, we're going to look at the um, horizontal line and the trend lines. If you're going to draw trend lines here, you can see this is trend line here. You can see here horizontal, then downward sloping of a trend line. I drew top of the wick as well as on the body. So certainly you can put your stop losses here on top of this location. So after finding this area as stop loss, your entry must be here. So let me look into our, let's try looking at into our fractals. Because the fractal, on top of the fractal is a good stop loss location. Fractal. Just give me one moment. I'm going to pull up my fractal. Okay. Where are you, fractal? It's probably here. You can see it here that this is really a good location for fractal. This is the previous high. So this area is a very pretty tight stop loss location because this one could be your stop loss location. This is a tighter one in daily perspective. So by looking at the fractal, this area has not been really violated. You can see that one. So the market went down, and it retests again, trying to retest the supply area in this location. It is here. That's the supply area. You can see it was tested, and our stop loss were not being Excuse me for a while. Really sorry for the interruption. There was just a folding glass outside. So you can see here that this stop loss is not really violated. You can see if you are going to put it here and hold it here, you can see that the market is, and you can see here that the market is going down. So that's one way of putting the stop loss that could hardly be targeted by the big players. This is daily, right? So not only that, we can also use the uh, parabolic SAR. Let's see if how useful parabolic SAR in our as our stop loss location. Okay. Yeah, you can see it here. Let me erase this one so that you can see clearly the parabolic SAR. And take note that the market really from here, you can see here impulsive move, because by looking at the parabolic SAR, you can see here that there is a big counter trend from this trend. Well, you can see one, 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 two, three, down. So if we are going to, I focus in this area, but if we are going to look in this location, starting from this location, if we follow the SAR as our stop loss location, our stop loss will not be really be taken out. Just like, for example, if you see the pin bar, that's a doji, right? Indecision of the market. I make it a mark green, and you decided, because usually when the fractals will be printed, usually the parabolic SAR will begin to print as well in that location. And parabolic SAR is a very a good tool for trailing your stop losses. So as you can see it here, the SAR here was violated, and you can see here that there is the angle of SAR was changed. It becomes horizontal, and you can see first violation of the bear fractal. And the market went up. So if we trail our stop, so let me have my hairline. So if we decided to enter in this pullback, because this is a pullback, test this area, then the market went up. And if you can see this signal bar, if you put your stop loss in this location, you can see it was not being taken out. So when you enter here, as the market went down, on the next candle, you stop your main, you keep your stop loss on top, and then the next candle, you can see that the fractal moved down a little bit, so you have to keep your stop loss on that location. So as here, so because that's an entry bar, right? I'll make this as green so that we can really take note. See the one? So fill your stop. This is your entry. As the market went down here, um, you're going to you have to maintain your stop loss on top. Certainly, it will not be taken out. As the market went here, look at the parabolic star on top. It moves the way down. So you can put your parabolic star in that location. So as the market went down, you can put your stop loss. You can bring down your stop loss down also. And then in this candle, you can bring down your stop loss lower. So, and then this is in this candle right now, you can see that the fractal has been printed because it was printed after this candle, after the closing of these two candles. So as the market went forward, so you can bring your stop loss here. Next candle, you can bring your stop loss here. So with the principle that patient first, this is our entry, right? So I have to keep this area as our entry. So there, we have a principle on risk management that first we have patience. Then after that one, reduce our risk. So this is what we're doing. We are reducing our risk each day because this is a daily candle. Then the third one is patience. So probably in this location will be a lock your profit, right? So as the market went down, we have another choice here. You can see the bar formation here. It could be expanding triangle, trying to test this area, which is the breakout point, and the market is right here. So in this location, as it moves in here, and the market move here, we can move our stop loss to another location, right there. And as it moves lower, you can bring your stop loss as another candle will be closed. You can see it went lower and lower and lower and lower. So if you follow the trend like this and you drill your stop following the parabolic chart, that's our entry, and I'm going to take this one. You can see here, let me have instead a vertical line. Make it blue, my favorite color. So as the market move here, we have already locked in a profit, right? And in that location, we can therefore, if we are an investors, therefore we have already a profits of how many pips in this location? 68 pips, but the market went down to 539 pips from here all the way down here. So the market went down. My blue next candle, it went down. Next candle, it went down. Next candle went down, follow the SAR. Next candle went down, and next candle went down. So certainly, if I am a trader, probably I should have closed my profit right here because the candle formation on the opposite side, the bull is trying to gain momentum in this location. You can see that the candle uh, formation, and the candle sizes is getting smaller and smaller. So you can, this location is another buy entry. So certainly I will take my profit right here, but my entry was well, my trade is well protected with my stop loss, right? So that's one way. So with the fractals and with the parabolic star. So if we are going to follow this sequence, this one, or there is another way of having your stop loss, you can trail your stop loss 2 candle down. Just like for this, if your entry is here, when the market move from here, want to trail your stop loss here. That's daily, right? So you can trail your stop loss. As the market went down here, move up, you can trail your stop loss from here in this location. But with my analysis, I expect that the market will uh, test the breakout point. That's usually the behavior of the market. It will be testing our breakout point. But if you follow as well, your entry is that one, and you trail your stop with the fractals, because as you can see it here, fractals has not been violated, right? So not being greedy, being an investors, this not the one that I shared to you is not for stop loss for a day trader, but this is a stop loss for the investor. All right, so if your options, if your options is with the fractals, fractals also is a good trailing stop location. You can see here, fractal has not been violated. So as the fractal has been printed here, you can move your stop loss above the fractal. So as another fractal was formed, so meaning to say this market is going down, you can bring your stop loss following the fractals printed in this location. We are going to remember that the price will move in 2 legs most of the time. So just like for this, one leg, second leg. But you can see this is the fractals that was made. Then from here, it tries to move up. 1 and 2, but this is a bear flag, right? You can see this. This is a bear flag actually, if we're going to analyze this one. So therefore, and a congestion. See that one? That's a bear flag. See? Ascending. We can see, we can also say that this is an ascending channel, right? If we are going to look this at H4 or H1, certainly this will be a descending channel. So if you're going to look at this, we can say also that this is leg 1 and leg 2. And you can see it here that the market move again, move up, because we can say that this is a corrective structure actually from here going there. These are corrective structure. You can see it here that the market move up, first leg, second leg, another first leg, second leg, first leg, second leg, first leg, second leg, first leg, second, this is probably first leg and second leg, first leg, second leg, and third leg, first leg, second leg. So that's how the market will usually do its movement. So if we follow the fractals is our stop loss location, you can see it here. It was not being taken out. Fractals right here. As the fractals move down, follow it. When it violates this fractals, we can move it down here. That's also a good trailing stop method. And as the fractal move in this location, certainly if you opted to put your stop loss here, because this is a breakout point, so probably I will decide to maintain my stop loss location here, because I can see that the direction of the market based on the parabolic SAR is still downtrend. Actually, it's stronger. You can see the angle from here, very strong, weaker but strong. Parabolic SAR was printed here, but we can see that this is a corrective structure. Breakout point, breakout point. The market play around here, but you can see that the fractal moved down. So if you started from there, follow it, follow it. So you can actually, if you did that, and that's why it's very also nice to start trading from where the market begins its downtrend, or the starting where the trend begins. So your entry here, you're an investor, you holds for how many, let me, your entry here, so how many days up to here you're holding your trade. So you got 1,100 pips for how many days? For almost, this is 3 months of holding. So this is big investors way of doing the trailing stop and their open trades. But having your trade open in daily, you have to accept that there are times that your profit will be reduced by this movement up, right? You can see that one. This is the disadvantage of the daily. But if you have a lot of money, you can make this as one of your method. You have your swing trade in daily and swing trade in 4R or H1, just to take this small movement right here, because in H4 this this is an uptrend in lower time frame, right? You can see here, right, it's red. I'm going to change it to blue. You can see it here that that is a 1 2 and wave. All right, so zigzag 1 2. So this is a downtrend, an uptrend in lower time frame in H1, downtrend, uptrend, downtrend, uptrend. But the bigger picture is downtrend. So if we are going to use Ichimoku as our trailing stop loss, because Ichimoku, the best really to open an entry. That's why before your setup, you have really to see your setup before having an entry with Ichimoku trade. So in Ichimoku, most probably this area you will not be entering trade, because as you can see it here. But if you understand the Chico movement, you can see it here, it's double top in the Chico. So you can see it here, double top. So meaning to say here, this is a double top, 1 2 1 2, because this is the wicks are really the high of the market, but that's but really the opening and the closing is with the Chico line. You can see it here that the Chico line did not reach this level. See? So if I will be entering with the Ichimoku, most probably uh, I'll be waiting to enter my trade in this location, right? In this location where I can see that there was a clear downtrend of the market, because in this area this is a whole bunch of ranging market or in equilibrium. You can see that the lines are kissing each other, and this is the portion wherein we can see that the market is really a downtrend. See it here. Certainly I will attack the market with the Chico breakout method. First, you can see it here that there is a, where's the cross? The cross happened here, but I will not be taking this one. So in Ichimoku perspective, but if you base on the trend line with Ichimoku and the support and resistance, you can see it here that this is a good entry location also, because that's a resistance. Here you can see resistance, and this is support in Ichimoku. Look at this one. So certainly I'll be looking for trade on the edges in this, close to this location and close to this location, here. So you'll end up profitable also if you apply buy low and sell high in this location. So as the market went down, you can see it here that there's already a dead cross. The price was crossed right here. So the market trying to cross the price up, but it wasn't able to cross upward. So actually in this location, because this is a resistance in that location, you can see it here. This is the, from here, 26 candle. So this is also a good entry. You can see it here that the Chico is trying to push this level. You can see here there's a Tenkan, there's a price. So it tries to break or to test that area. That could be a breakout point in this location. So this area is a good entry location. So most probably I will have a sell stop order here, and my stop loss will be here. How many pips? 101. This is the thing with higher time frame. Your stop losses will really be higher, or you can have an option going to 54. So, but the R2R, if your stop loss is in 100, what you're going to do is just calculate your amount or percentage to risk in the market. Usually, if with my capital, I'll be risking probably 0.05. I'll be building it up until if I can drop 2% out from my capital, then I'll be risking the full 2%. If it will be lost, then what I'm going to do is I'm going to go back to square one. 0.5% of my capital will be risked if it is a 100 pips above. So if this will be the stop loss, you can see it here. Let me have my this one. So this is your stop loss. And your entry will be below the doji. This is conservative as stop loss, because you can have option here because it's below the Tenkan, right? Green. So your option for the stop loss, the Tenkan, the Kijun, or the Tenkan. But in this location, most probably it's just how many pips? 76 pips lower. So certainly I will be, and you can see it here, there's a breakout in this location. So this, and you can see here that the market were not able to break above the Kijun. So if you follow with the Kijun from here, stop loss here, you trail top stop with your Kijun, certainly it will be taken out. But if you follow with the fractals or with the parabolic star, you can see it here that your stop loss were not taken out as it moves down all the way down. You can see it here. So it's up to you whether what you're going to use, fractals, Kijun, or the parabolic stars. You can see certainly here that the order flow is really downtrend. Look at the movement, how strong it is all the way down. From here, went down. So if I enter here, let's first check with the fractals, with the Kijun. So when the market went down, as the market moved here, so certainly I will be moving my stop loss on top of this one. So almost break even. As it moves here, my Kijun is still up there, so I'll be probably bringing my stop loss here. As it moves down, you can see that my Kijun moves lower also. It means it's a lower, the market is trending down. So after the close of this market, certainly I will bring my stop loss here. So it's already break even. No, I lock in some of the profits, right? So as the market moved down here, you can see that the Kijun is going down. So I'll be moving my Kijun here, move down here, move my stop loss here. I'm following the Kijun, stop loss here, stop loss here, and stop loss here. You can hold it there. You can see that the market was really strong here. The angle is pointing down, all pointing down. You can see also the twist of the Como right here. So it will be 56 ahead where we enter. So 26 advance. Look at the one, 26. So the 26 is here. So certainly the market is really downtrend with a future Como. See that one? Angle down, all angling down. So this is really a bull market, but you can see here that the angle changes, So if we follow with our stop losses, so we gain here, as the market move here, stop loss certainly will be taken out if you do the trailing stop with the Kijun. Another one, you can see, you can also use the Tenkan, right? Although Tenkan is very tight in daily. So let's try the Tenkan. If you enter here, started with the Tenkan, as the market move here, Tenkan has not moved down. So actually we can put our stop loss here, break even with the Tenkan. Next, where is it? We can move our stop loss here, so we lock in some profits following the Tenkan. As it moves here, after the close of the candle, remain our stop loss. Move here, after the close, we can bring our stop loss right here. After the one, we can bring our stop loss right here. Tenkan, after the close of this one, bring it here. Tenkan is also a good following trailing stop. bring it here. You can lock in your profits properly in daily. Bring it here. Bring it here. See here? So Tinkan moves all the way down in this candle. So I certainly will bring that here. So we lock in, since from our entry right here, we have already locked in how many pips? 300 pips. And then here comes the principle of patience. Reduce the risk, patience, and lock in profit. So this is what we're doing right now. So as the thing can move all the way down here, after the candle will be finished, we can move our stop loss here. You can see here after the market went down. But what does the Chico is telling us? It's inside the price. So what does it mean? The market is in equilibrium. As you can see here, the market is in equilibrium, and this breakout, sorry, I burped. So you can see there was a breakout in this support. It happens here, 26, yeah. So 26 all the way down here. So in this location is really a good profit area because this is support with Chico line. You can see from the left, support, support, so important support area. Chico is telling that one. Although you can play around here with the pure price action technique. You can buy here, so you will be gaining profits. Actually, as an investors, this is what you're going to do, right? Or the other one that we can apply is I'm going to erase everything. The doing that I have is using the fractals. Fractals. Remove all my drawing. I know what I mean is using the Fibonacci retracement. From here, as the market went down here, exactly this is the starting of the trend. So 1, 2, 3, 4, 5 in Elliott wave. I'm counting the Elliott wave. So usually first one movement, the pullback of that will be around 76 to 88 usually in the first strong movement. The second movement, this is the three, this is the third of Elliott wave pattern. So retracement is normally will be around here. So my stop loss will be to the next Fibonacci level if I enter right there. So right here. This is Fibonacci approach. See that one? If you enter right here, this location. No confirmation entry, right? So as the market went down, we can bring this one right there. Exactly, probably this is 50%, 61%. So after this market went down, I'll be trailing my stop here at 61, above 61. That's also certainty. As the market went down, probably this is 50%. So move your stop loss right here. Market went down. So keep your stop loss at 50% occasion. Let me move my camera here. So you can see here that Fibonacci level are respected. This is 38, Entry here, stop loss here, 38 and 23, and the market fall or plummeted down. So as the market went down, Fibonacci level is this retracement is 38, 23. So most probably I will be putting my stop loss here as it moves all the way down here. So I'll be putting my stop loss on top of each level of the Fibonacci level. Or you can do it like this. Because in wave theory, this is wave 1, Elliott wave, wave 2, wave 3, is really perfect Elliott wave pattern. And it states in the rules that the wave 4 will not be beyond the wave 1. So you can see here that wave 1 was respected. This is Elliott wave. That's the Elliott wave number. So I have to mark it down here. So that's why Elliott wave is really nice thing to use as well. This is 1. This is 2. This is 3. Usually 3 is the highest, has the highest movement in the Elliott wave. This is 4. And 1 and wave 5 is almost equal. Let's check. That's the pattern for Elliott wave. 517, the wave 5 from here. That's it. Yeah, equality. You can see here, almost equal. So I can therefore say that this is wave 5. This is the ABC correction. So A, B, C correction. A, B, no, that's not B. Yeah, that's correct. A. This is A movement, a correction. So this is must be, what happened? All right. What happened? I'm going to drag it down. Cannot drag it down. Oops. Yeah, that's B. Yeah, that's A. This is C. Then another 1, 2, 1, 2, and 3. See the 1? So 1, usually in 1 going to 2 has a deeper pullback. This whole sequence is 2, and this is 3, this is 4, and this is 5. So if I'm going to draw it here, 1, 2, 3, which is the longest movement, 4 correction, and 5. 5, 1, look at 1, 1, 400, 500. So there is an equality. So this is how we can use the Fibonacci level. So I'm just marking the Elliott wave. Fibonacci, that's the one. So in this location, 100%. So that's not the right way. So this is really the right one. Here and here, 50% here and there. And in this movement, in this strong movement, we can put our Fibonacci level here. As it moves here, it's 70. This is 76. The whole thing, this is 61, this is 50. You can see 50 here. First move, if we are going to put the right one, because I consider this one in the cycle, usually the dip retracement around 76 or 88. The second one, the ABC. Third, usually will be around 50 because it will not be above the wave one. You can see it here. If I draw a bar here, the wave 4 will not be going beyond the wave 1. See it here? So around this, it is 50% of the movement, and it moves down. So probably this is I expect reversal in this location based on Fibonacci level. So, but that's how we follow with our stop losses with Fibonacci level. So that's the way. And we can see here many patterns in doing it. So if you want to reduce your risk, that's the time that we're going to go to lower time frame, right? Because it has different forms, just like this one. If I'm going to mark this area, and we'll go to lower time frame. Let's try to go to H4. We can reduce R. Stop loss, right? You can enter here, stop loss here. So your stop loss will be reduced because this is a signal bar, entry bar, 68. Or if we go to H1, we can reduce also. That's the reason why that we can also attack this market on 5 minutes, but we have really to mark our levels, the patterns. If you're going to attack the 5 minutes, we have really to see to it that we are in the right direction. So just like this one, if I go to 1 hour, you can see we can reduce. This is a signal bar, right? So stop loss here, 20 pips stop loss here, 177. So this is how to reduce our risk. But we should be at the edge of the daily, right? Here, this is the edge. We have not checked this in the daily. What's the pattern that it has? So let me reduce this one. We try to do some trend lines. Yeah, this is an overshoot in daily. Climax, you can see it's a parabolic wedge. It's a climax, exhaustive movement. And it's very clear that this is a descending triangle. So if you want to attack 5 minutes or 15 minutes, You have to make certain that you're attacking close to this area. Do not attack it in the middle of the range. Certainly your stop loss will be taken out. So that's the tip. So I'll give you one example before I'll be ending this webinar. I'll be providing you one tip on probably right here to enter on the lower time frame. Let me check it here. Yeah, this is the formation in this location. This is the resistance. This is certainly the congestion area. That's a resistance, right? But in this location, we can see here 1, 2, 3, that one. So this is an entry location for me. This one, because if you're going to check this in MACD or price rate of change, let me check on rate of change. Where are you? You can see here there was weakening of the downtrend. See that one? The angle has changed. Although the angle here there is, you can see here there is a divergence even in price rate of change. Connect it there. It's already divergence, right? The market is going down, but the price rate of change is going up. So certainly in this third push is an entry for long for me. Let's check on MACD. Now this is how we're using other tools on how to check the area. Yeah, certainly there is. You can see that one. That's a trend line. So if I'm going to move this up. Yeah, that's it. Not that one, but this one. 1, 2, 3. So this is there was intersections 1, 2, and in this location, if we're going to check on the left, there is support. See that one? Good support. Good support. Check with Fibonacci, and there is already a divergence in this location. So certainly I'll not be looking for a buy here. I know a sell. Certainly I'll be, and it is the third push. 1, 2, 3. You can see in small pattern also. First 1, 2, and 3. So I'll be looking. So to reduce our risk, I'll be looking when the market will touch this area. I'll be going to H4. Let's see what happened in H4. Please move this window away from the shared application. What window? Just a while. Okay. Just a moment. I'm checking something. Something is wrong. All right, I got it. So I need to remove this window. Bring my zoom. My screen share is paused, so I have to stop it and do another screen share to be certain. I did not notice that one. So I discussing that if we go to lower time frame, we can reduce our risk. This location. Look at this double bottom 1, 2, 3 setup. So most probably I'll be entering here. Actually, I entered in this location because I see this 1, 2, 3 counter trend trade 1, 2, 3. I enter this. I only this location. Hello, Norman. All right, Norman. Welcome.
Good afternoon, sir.
Hello. Good afternoon, sir. Welcome to my webinar.
Thank you.
You're welcome.
I'll just follow. Go on, continue. Thank you for having me.
All right. So can you see my screen?
Yes,
All
clear,
right.
crystal clear.
All right. So actually, I'm almost in. I think how many hours when I started 1:30, almost 1 hour. So actually, I'm. You can review the beginning of my presentation, but right now I'm giving example how to reduce your risk in entering in lower time frame. But I use parabolic ZAR. What else? I use fractals and the patterns itself of the candlestick pattern, and the chart patterns as well. So right now, I was giving an example on how to enter with a low risk in going to lower time frame. So I was looking at this location in uh, daily. Can you follow, sir?
Yes, sir.
All right, that's good. So I'm going to move to 4R. You can see that we can reduce our risk in 4 hours. There was a double bottom, rising pattern, rising method pattern. This is a good entry right here. Hammer, inverted hammer. So 125 pips. This is a counter trade. So if I go to 4 hours, certainly you can reduce enter right here. That's 33. Or this one, 22. Or you can go to 15 minutes to reduce your risk. My post was, what's the problem? All right. Okay. So I can go to 15 minutes and check that area, that location. This is the area. So in 15 minutes, I can reduce my stop loss to 16 pips. But it should be close to the trend line that I made. You can see it here. It's a support in 15 minutes. Support area because this is a demand zone. Support. So you can enter here with a low risk as well as here in 15 minutes. So 13 pips. So this is how to reduce your risk. Or you can go to 5 minutes. But in 5 minutes, you have to take your trade close to the trend line that we draw. 5 minutes. So in 5 minutes, here we can attack it right here because in 5 minutes you can see here head and shoulder. So this one, head and shoulder. So this is how to reduce your risk. So if we attack in 5 minutes, this is the signal bar. You can see engulfing bar. This one, very nice engulfing bar. So most probably I will have a buy stop entry here, 10 pips only in 5 minutes. So this is how to reduce your risk in entering the market. So before I will be ending this webinar, um, I will be having a back testing of our idea with uh, TradingView. So I will stop my screen share and let's do it in with TradingView. Okay. Hello, sir Norman. Screen share, TradingView, my TradingView. Where are you?
Hello, sir.
Yeah. Can you see my screen?
Not yet.
I'll be sharing. We will be doing back testing on before I'll be ending. We'll just look for setup, then we will try to do back testing with what we learned today. So I'm looking for. All right.
Have you eaten your lunch?
Yeah, it's almost prepared right
We,
now.
suggestion. Can we do it after you lunch?
Yeah, the back testing.
Yes. Take your lunch first, sir.
Yeah.
Anyway, I have nothing to do.
All right. Okay. There was a brownout. Brownout? Brownout? All right. Sorry for today.